The local all-share index looks set to open to positive global markets this morning before what should be a busy week for news. Attention is on Europe before the European Central Bank and local Reserve Bank policy announcement on Thursday, with a hike widely expected as both countries battle with surging inflation. Zwelakhe Mnguni, Chief Investment Officer at Benguela Global Fund Managers, joins us now for an overview of the latest market-moving stories. A very good morning to you, Zwelakhe. Thank you for your time. How have the markets opened this morning after the JSE tracked firmer global peers on Friday?
Yeah, we had a very green Monday morning, and I think that's led by the resources sector in particular. I think the resources sector is up about 3%, and we've also seen in the industrials and financial sector there is also quite a bit of strength of 1.5% to 2%. So it's quite a positive day in the market, but certainly the resources sector is the one that's showing a lot of performance, with the likes of Kumba being up over 4%, Implats around 4% too.
A lot of data is expected this week. What can we expect from the consumer price index on Wednesday? And are we definitely set for a rate increase on Thursday?
Yeah, I do think that we will probably see inflation continue to tick up, because generally you feed it into the system, and then it takes a while to actually manifest completely into the system before it can slow down. So I do think that the kind of fuel price increases that we saw in the past few months will actually start to come through in consumer products meaningfully in this expected data. And I do think the rates would also continue to tick up. I think there is no doubt that we saw the U.S. inflation data was above what was expected. So we'd likely see the U.S. hiking, and I think the central bank in South Africa would do as much as they can to try and defend the rand as well, to try and stem the inflation.
Energy regulator NERSA has been ordered by the High Court in Pretoria to publish Eskom's tariff application for the 2023-24 financial year on or before the 1st of August. Now, this application is for an increase of just over 32%. What does it all mean, an increase mean, perhaps, for our already reeling pockets?
Yeah, look, I took the data that they reported for December, the Eskom revenues that they reported for December, which is the interim, and I annualized it. And it looks like a 32% increase would be about 86 billion. And that would actually mean an increase, an inflation increase of about 2% from the base. So if we're having a 6% base, that specific increase would add about 2% to the inflation. So that could take us to 8%, for example. So it would be quite severe for the consumer, in that you're going to get a second round effects now. The producers and the retailers trying to recover some of that cost from the consumer. So we'll start to see a continued momentum in inflation. So it's not good at all.
And Sasol has declared force majeure after delays in crude oil shipments, shut down its Natref refinery. What does this mean for the local oil refineries?
Yeah, first of all, that was the last operational refinery in the country. So Sapref in Devon is down, and the one in Cape Town is also down. Certainly, what it just means is that we could face energy shortage. So the basic fuels might come short or against demand. So we might see again, they might have to import a lot of refined products into the country. But I do think that will probably feed into the inflation system. I mean, the rand compared to where it was, say, 3 months ago, where it's sitting around 17. I do think that if you import refined products at that level, you also pay the margin for the outside refineries, and you're going to actually feed that into the inflation in South Africa. So there'll definitely be some concerns that there could be fuel shortages in the economy.
Very well. Thank you so much for that breakdown. Wrapping up the very latest in the world of business is Chief Investment Officer at Benguela Global Fund Managers, Zwelakhe Mnguni, giving us a sense of how the markets are also faring. Now, in